Before knowing more about single finance, we will first start with liquidity mining and yield farming, and how decentralized exchange, that is DEX, which is also called Automated Market Maker, AMM, are involved in the process. Please watch our previous introduction video about liquidity mining and yield farming. In simple terms, liquidity mining is the process where DeFi users supply a pair of tokens in the liquidity pool of a DEX to earn a portion of trading fees from other DeFi users who seek to swap between those two tokens. On top of this, users are also rewarded with the DEX native tokens or project tokens when they stake their LP token to the farm. The LP token here mentioned acts as proof that the user has a certain share of the liquidity pool. Annie is a newbie to yield farming. She was attracted by the high APY shown on a yield farming protocol. To start, she took her 10,000 USDC as principal, yield farming in USDC CRO pair on day 1. Assuming CRO was at $0.2, Annie would hold $5,000 USDC and use another $5,000 converting to CRO, that's 25,000 CRO, to make a 50-50 split to provide liquidity to the liquidity pool. Due to price fluctuation, CRO fell 20% since day 1. Under the AMM mechanism, the pool value and the number of tokens would then be balanced under the formula X times Y equals K. The pool asset was adjusted from 5,000 USDC and 25,000 CRO to 4,472 USDC and 27,951 CRO. Annie didn't know how, but the position value somehow shrank by 10.6% to $8,944. This contrasted with what she understood. Yield farming is a tool to generate yield stably. The reason behind is that the position value is highly correlated to the price of the farming tokens, and this is called the price effect in single finance. So, what does single finance do to help users safeguard the yield farming assets against price changes? It is a pseudo market neutral strategy. The pseudo market neutral strategy is created under leveraged yield farming. Unlike traditional financial markets, where leverage means doubling down risks, leverage used in the strategy is to hedge the price risk. Let's see how it works. Brenda farmed the USDC CRO pair with 3x pseudo market neutral strategy in single finance with $10,000 principal on day 1. At the back end, the principal was leveraged by an additional $5,000 in USDC from the protocol. Brenda's USDC position was worth $15,000 in total. On the other hand, she borrowed $15,000 in CRO and equivalent to 75,000 CRO units. The above assets were farmed in a 50-50 split in value to provide liquidity to the liquidity pool. The pool value became $30,000 in total, 3 times of Brenda's initial principal, thus generating 3 times of fee and reward. The 75,000 CRO stayed in Brenda's liquidity pool was regarded as in long position, just the same as Brenda held the asset, getting profit if CRO price rises and losing value if CRO price falls. Opposite to that, Brenda's debt of 75,000 CRO was regarded as in short position. Shorting is the act of borrowing an asset and sell them in advance of acquiring them, with the aim of rebuying the asset at a cheaper price when the price falls to make a profit. Note that in this case, Brenda go long and short for the same amount of CRO at the beginning. Therefore, Brenda had 0 CRO price exposure in her initial farming position. It's called market neutral or delta zero, which fully eliminates the price effect on CRO. Frankly speaking, when the price of CRO moves, number of tokens in Brenda's pool will be adjusted to maintain 1-to-1 monetary ratio. At that time, the CRO price effect will not be perfectly hedged, and slight impermanent loss would be incurred. On single finance, we could always check the delta status under My Strategy Positions easily. Let's look into an example with math. Say CRO drops by 20%. The composition of Branda's position will be adjusted from 15,000 USDC and 75,000 CRO to 13,416 USDC and 83,853 CRO. The position value is 13,416 USDC times $1 plus 83,853 CRO times $0.16 equals $26,832. While at the debt side is 5,000 USDC times $1 plus 75,000 CRO times $0.16 equals $17,000. The net equity value of Branda's position would be $9,832 in this case, compared to Annie's equity position of $8,944. Branda's position is in much higher stability. Though most of the price effect is eliminated, there is one thing you need to know. Branda's position value is still affected by the impermanent loss. That's why the strategy is called Pseudo Market Neutral Strategy. Pseudo means closely or deceptively similar to a specified thing. A simulation of equity value with Pseudo Market Neutral Strategy is plotted. It is observed that even a non-stable coin is in a large drop in value like 30%, the equity value of the position only drops by 4%. Furthermore, the equity value is pretty stable for both side movement of the token price. The minimized equity loss thus can be easily covered by the return generated from trading fees and farming yield, enhancing the overall safety level of the farming position. We also suggest everyone to try out our Pseudo Market Neutral Strategy simulator to know more about the equity change and capital protected price in different farming tenors. It can be accessed on the official website of Single Finance under the category of Strategy. Select any pair of farming coins, enter any amount in USDC to activate the simulator. Although most of the price effect is hatched away by the Pseudo Market Neutral Strategy, to tackle the unexpected market plunge, Single Finance did one more step to further safeguard users' assets. It is the Capital Protection Bot. Unlike most of the stop-loss mechanism in the market which is based on debt ratio, our Capital Protection Bot monitors the position's value in terms of USDC. Once the position net value drops below a predetermined protection threshold, the bot will automatically close the farming position and convert all the assets to USDC. This is important as the user is not getting back the non-stable tokens which are still subject to price fluctuation. This proves to be a considerate mechanism that let our users sleep tight at night. So, what are your thoughts about Single Finance? Are there more strategies or product scope that you want us to create further? Join our community on Discord, Telegram, Twitter, and Reddit to share your valuable opinions with us. Single Finance. Earn more with less risk.